Let's get right to the floor show to dig a bit deeper with Siebert Financial Chief Investment Officer Malek, who's ready to go. Mark, what a week it has been. And we look at the week-to-date gains. Everybody's in the green. And October's supposed to be this scary, horrific month for stocks. What's going on?
Apparently not. All the flags are flying in the right direction at this point. This was a setup that has been happening for months. We have fiscal stimulus, we have monetary stimulus coming on board, we have stocks that are having they're exceeding expectations already.
The Russell 2000
Unbelievable.
up 2.6% on the week.
Unbelievable. Just as the ink dried on all of our reports earlier in the year saying, I don't know if this is ever going to come back, and the Fed came back and the Russell responded, and now we have earnings to go along with those high hopes. So again, the story is all about the earnings, and every quarter we think they're going to be tough, and they're not tough, and this quarter so far is looking great. So far, everything's pointing in the right directions. Everyone is executing on the plan.
That's when some people start to get a little anxious. They think this is too good to be true. So what signs are you looking for? We got this CPI report, the Consumer Price Index inflation number for, the consumer inflation, but it's very late, September. It was supposed to be out much earlier, a couple of weeks ago, but here it is. It came in lighter than expected, month over month and year over year. So as you see these numbers, this is a benign inflation report. Normally, people might get nervous and think, well, why do we need a rate cut? And yet the market believes that this isn't enough to scare the Fed off another rate cut next week.
Yeah, I mean, the Fed clearly has other fish to fry at this point. We see weakening employment situation. That is something that they have to focus on. That's something that they've been clearly signaling. These increases in CPI, they're minor increases. We're watching them very closely. That was another one of those that we expect them to get ugly and ugly and ugly, and they're not getting ugly. Mm-hmm. The reality is the tariffs everyone was afraid was going to spark a next wave of inflation. It didn't happen, not at the consumer level at least. So we're seeing more and more evidence that companies are beginning to eat those additional tariffs, not going to pass them along to consumers.
Okay, we talked about AMD, but you look at Broadcom, that one's spiking. They all lead to one particular stock that you absolutely love, and that's Taiwan Semi. So what is your thesis behind it beyond, they manufacture the chips that everybody else designs?
Yeah, well, they have had a history of perfect execution, right? There are risks associated with TSMC. There are a lot of eggs in that basket. Such as, everyone is using TSMC, and one of the big ones is they're within spitting distance of mainland China. And so there's that, and everyone's been concerned about that.
And it has China wanting to maybe
absolutely
bring it back under the wing.
Exactly. Every time you see a plane fly nearby, you wonder why we have all those chips in one basket, literally. But the reality is that this has been a risk that industry has taken for some time, and now there are moves to maybe spread that out and diversify a little bit. But still, there's so much potential upside in that company. They're just doing everything right at this point. In addition, they're making big investments over here in the U.S., and so that'll allow them to also diversify their holdings geographically, at least.
And this leads to the AI, well, some people call it a bubble. You simply call it exuberance, but nothing that's worrisome.
No, when Greenspan said irrational exuberance, we had a rally for several years that followed. Of course there's exuberance. There's good reason for exuberance, but is it irrational? The answer is no. There are corners of the market where you start to see some irrationality, but for the most part, there's still plenty of great stocks out there that, a lot of them are overbought. A lot of them are rich, but stocks that are overbought and rich can stay overbought and rich for quite some time.
Well, and part of this exuberance is being shown today. You look at Google Alphabet, the stock is hitting a record high. It has struck a deal with Anthropic. Anthropic is, now Google's in the chip business in a way, a processor business, because Anthropic is going to be using Google's tensor processing units. I mean, as you look at that type of deal and these questions of, quote, circularity, where everybody's investing in each other so that both sides will buy each other's products.
Yeah, I mean, that is a concern, and that is something that we have to watch. That is a risk. We've seen some of this before. I wrote about the CLEX, of the late 1990s, where everyone was putting fiber in the ground, and suddenly we had too much, right? So everyone's going after this market opportunity right now, and more capital is going into it. You wonder, is it too much? So you got to watch it really carefully at this point.
Well, Mark Malek is watching it for all of you guys. So thank you very much, Mark. Good to see you.
Great to see you.